Hey guys, so in this video, let's take a look at Yamana Gold and see if the company is undervalued or not, because uh, the share price for Yamana has dropped about 30% since the August high. One of the main reasons for the price to drop is because gold price drops, right? So gold price was at all-time high in August, and then it dropped about 11 to 12% ever since. And that's why a lot of the gold producers drops their price as well, because producers have leverage in gold price, right? So when the gold price drops, usually the producer drops as well. So yeah, so let's break down Yamana Gold in more details. So first of all, let's take a look at their Q4 and 2024 year earnings numbers. So you can see that in 2020 they produced total gold equivalent ounces of 900,000 ounces, right? And you can see their biggest mine is the Canadian Malartic mine that produces about 284,000 ounces of gold in 2020. And you could keep in mind that this mine is in a joint venture with Anigo Eagle. So both of company own 50% of the mine, and the 284,000 ounce is the 50% portion for Yamana, and it's accounted for about 36% of their total gold production for 2020. And then you can see their second mine is the Jacobina mine that located in Brazil, that produced about 177,000 ounces of gold in 2020. So it's accounted for 23% of the total gold production. And then their third mine is El Peñón mine that located in Chile that produces about 161,000 ounces of gold in 2020 and accounted for 21% of the total gold production. And then their fourth mine is the Minera mine that located in Chile as well, and that this mine produced about 89,000 ounces of gold in 2020 and is accounted for 11% of the gold production. So the last mine is Cerro Moro that located in Argentina. So you can see that this mine produced about 60,000 ounces of gold in 2020, and it accounted for 9% of the total gold production. And you can see that they also produce silver as well. So Cerro Moro produced about 5.4 million ounces of silver in 2020. And also the El Peñón mine that produced about 4.9 million ounces of silver. So you can see that they do have exposure to significant exposure to silver, right? So if you look at their metal breakdown, you can see that 87% is gold and 13% is silver. Now, if we look at their reserve numbers, you can see that the total gold reserve that they have is 13.8 million ounces, and silver reserve is around 112 million ounces of silver. And they also have copper. So copper accounted for 6.6 billion pound. So basically, you can see their production profile are in two continents, right? So the North America accounted about maybe 36% of their total production, right? And then the rest of them, about 64% of their production is in South America. So in terms of the jurisdiction wise, I think that they're in pretty good jurisdiction. Obviously North America is tier 1 jurisdiction, and then South America is somewhere in a higher end of the tier 2 jurisdiction, in my opinion. Now let's take a look at their 2020 financials. So you can see that their revenue is 1.56 billion, and then their cash flow from operation is 617 million, and they generate free cash flow of 344 million. Now if we look at their balance sheet number, you can see that cash on hand they have around 651 million, and then they have significant debts. So you can see that their debt number is around 994 million, right? So that gives us the net debt of 343 million. So they do have some debts in their balance sheets, but it's not like a lot because they do have cash. They do have a lot of cash as well. And then you can see that the dividend yield as of February 12, 2021 is around 1.72%. So let's take a look at the two valuation metrics that I use for a lot of the gold producers. So they are the price to sell ratio and the price to cash flow ratio. So basically for cash to sell ratio is basically just give you guys an overview of the company and see in the first glance and see if the company is undervalued or not, right? So for Yamana, their price to sales ratio is 2.9%. Second ratio I always use is the price to cash flow ratio. And again, just ratio, you use it to compare with peers. So the company looks pretty cheap by looking at these two ratios. And then another valuation metrics I use is book value per share. So book value per share will give you, basically it'll give you, it'll give me a confirmation of the two ratios that I use, right? So if we compare it with the actual share price, current share price, you can see that the share price for Yamana right now is around $4.81. So right now Yamana is trading near book value, right? So that means that usually when a stock is trading under book value, it means that the company is really, really cheap. So since Yamana is trading around book value, so that's why the book value per share gives me the confirmation of say, okay, I look at the, because when I look at the price to sell ratio, I think the company is cheap. If I look at the price to cash flow ratio, I think the company is cheap. And then book value per share just give me more confirmation that saying that this company is pretty cheap right now. Now, if we look at their growth profile, so you can see why the company is trading pretty cheap, right? So this could be one of the reasons why, right? Because you can see that production profile for the next 3 years is flat, right? So in the next 3 years, 2021 to 2023, you can see that they are producing 1 million ounce of gold equivalent for the next 3 years. So this is one of the reasons why this company is trading pretty cheap. Part of the reason, right? This is just like the part of the reason. And another reason why I think that contributed to the share price because of their Canadian Malartic mine. So you can see that. So first of all, you need to understand that the current operation in the Canadian Malartic mine is an open pit operation, right? So right now you can see from this chart, you can see that they only have the open pit portion of the mine. They only have about 7 years of mine life left. So in order to continue mining from the Canadian Malartic mine, they have to go underground because they do have underground resource of 14 million ounces, all right, 14 million ounces in the underground resource. So basically their open pit resource are depleting, right? So now they have to move to underground. So in order for them to move to underground, they have to develop, right? They have to basically needs capital to develop the underground. So you can see that their initial capex for the development of the underground Canadian Malartic underground, it requires about 1.1 billion dollars. So the initial capex for the underground is 1.1 billion, right? And this is in the 100% basis. So as mentioned earlier, the Canadian Malartic mine is in a joint venture with Agnico Eagle. So basically, so for Yamana, they had to pay half of the 1.1 billion, right? And I think that the market gets a little bit nervous because they just released this news recently, right? So I think the market gets a little bit nervous about the capital required to go underground. I think that they can, like for example, maybe they have to issue. So for example, maybe the market is pricing in that they have to issue shares to fund the developments, but the company did stated that they can fund the operation. They can fund the development with cash on hand and also from free cash flow, right? So I don't think the capex is an issue for Yamana, but I think the market is just a little bit sensitive in terms of like the cost side, right? The capex side, and also because when the Canadian Malartic mine goes underground, they can only produce about 500 to 600 thousand ounces of gold per year. So that's a bit, I think, yeah. So that's a little bit lower than the open pit operation. So again, I think this is not like a big issue. Like you can see, so basically the market saying, so basically I think the market again gets a little bit nervous because they see that in the future there are, like you can see that in the future the Canadian Malartic mine is gonna produce a little bit less gold production. So aside from the gold price dropping, I think this is the main reason why I think Yamana Gold is kind of underperformed to peers. And again, I don't think this is a big issue, and I think the market eventually will digest. And also because they do have some other projects in the pipeline, so they have projects that can increase their production level. So for example, beyond 2023, they have a West Mag mine that located in Canada, is a gold mine that produces about 160,000 ounces of gold per year with all-in sustaining cost of $635 per ounce. So this gold mine, they'll be in production around 2025. So it will add some production into their overall production profile, right? And you can see that this mine contains about 1.7 million ounces of gold reserve, and then they have measured and indicated resource of 2.5 million. And then we have another project that can add to their production profile in the future. That is the copper project that located in Argentina. So this is the copper project that they have. They are in a joint venture with Glencore and Newmont. So you can see that Yamana own about 56% of the project, and Glencore own about 25%, and Newmont own about 18%. So you can see this is a pretty big mine, and it can produce about 452 million pounds of copper per year for 25 years. And then you can see that their first 10 years production is around 533 million ounces of copper equivalent. And then with all-in sustaining cost for the first 10 years is $1.52 $1.52 per pound. And then they have an initial capex of 2.4 billion and internal rate of return of 19% based on I think $3 copper price. So in terms of the size of the project and then the capex, I think is pretty decent, and also they have two major as a partner, right? So I think this copper project will add a lot of value for Yamana in the future.